How we doing this morning? We good? We feeling fresh? Already in a trade this morning, just waiting for that to play out. All good, Eric. All good. Looking forward to the weekend, man. It's been a long effing week. I'll be honest. Probably streamed about 60 hours this week, 60, 70 hours. So I'm pretty goosed, but looking forward to the weekend. Gonna get to the mountains this weekend. I think do some get some fresh air. Hike some mountains, do that sort of stuff. So looking forward to it. Little 5-handle Fridays, bish bash bosh. Make some bag. Get out of here, boy. Get out of here. So I'm currently long at the moment. I've already I'm already up about $1,000 or something. What am I up? So quick look. Yeah, banked $1,000. So, don't need to push anything from here. Yeah, to be honest, Eric, I'm not always on here. I tend to stay inside the red pill, but now and again I'll drop into YouTube and say hello, see what's up, see what the wider community is doing. So I can't just get stuck in the old red pill, right? There's nothing wrong with that. I absolutely love our community, but now and again it's good to engage with the wider community, see what's happening out in the big wide world, and give back. Right, that's what it's all about. It's giving back, helping others achieve their goals and their missions. Right, that's all I give a shit about. Nothing else. P.S. I got to stop swearing on YouTube because I just keep getting these. I'm just gonna get banned. Simple as that, really. Yeah, no, you can't. 10. It's annoying. It's annoying, especially when now and again it populates your verbalage, right? It's got to be inclusive for all, right? You got to be family friendly, right? You can't have like 15-year-old kids, especially when you set your like YouTube up for basically anyone can view it, right? It's not suitable for kids, but kids can view it. That's basically what you have to select certain categories when you become a streamer and all that sort of stuff. So you obviously can't F and Jeff, if there's potential, minor that might watch your content. So I get why they do it, and it's pretty valid, to be fair, so I should probably cut it out, but now and again it slips out. So I apologize if there's any of that disgraceful language that sort of drips into this stream. I do try my best, but now and again I get carried away. Now and again, I get carried away. Did you guys just say you have Tourette's? Oh, do you reckon you can get away with that? Just play the old discrimination card. just take YouTube to court. I'm not proud of it. It's not something I'm proud of. So who had a good day yesterday? We absolutely slayed yesterday. Made an absolute fortune yesterday. A mini fortune. It was an absolute, literally every swing high, swing low. Dialed in yesterday. Dialed in. So how do you guys do? Did you back? Were you green? Were you red? What was the situation? Right, because we want to end the week green. That's the goal, right? We don't want to go into our weekend screwing that we've messed up our week. So personally, I do 5-handle Fridays. I know a lot. We do 5 handle Fridays inside of RP, where we just look to get green and then sail off into our weekend. Right, we sail off into our weekend. And not trying to overstretch it, not trying to get cocky, just staying humble, humble, and just enjoying our weekends, right? Enjoying our weekends. I did okay, just under 1,000 on about. Okay, okay, dude. Give yourself a pat on the back, Eric Bell. Come on. £1,000 on $1,000 on a vow. Jeez Louise, brother. That's amazing. All right. You tell me anywhere else where you can get $1,000 in a day. You know, there's very few jobs. Maybe if you work in software, you can get $1,000 a day. OnlyFans. Yep. That's definitely a route. Especially if you have billionaire sons who are just trying to flirt with you. Like, God, man, that guy's... Have you seen that stuff? The son of that billionaire who just got imploded in a submarine underwater. His son's like flirting with OnlyFans models when there's a massive hunt for his fucking dad or stepdad. Savage. Savage. Spoilt. See you next Tuesday. There you go. I didn't swear. Bosh. But yeah, nowhere else. Best job in the world. Indeedy. There you go. So you didn't do okay, mate. You did absolutely incredibly well. Give yourself a pat on the back. That ain't easy. Most people are red, right? 90% of people are red. So the very fact that you're green is amazing. Now throw in the fact you made $1,000 and jeez. No. Now we're smoking, right? Now we're cooking on gas. So well done, man. That's amazing. Good stuff. Keep it up. Make sure you journal that shit. Whoa, I was so close. I was so close. Make sure you journal that stuff, right? Because oftentimes when you'll have a red day, you'll focus on that and you'll go, God damn it, I'm useless at this game that we call trading. I'm terrible. I need to work on that, right? But if you journal the days where you absolutely bag, you can. It's positivity, right? It's good for your morale. It's good. You can look back on those trades. That's the kind of stuff that you want to, reinforce on yourself. You can do it. You can bag $1,000 in a day. So if you can do it once, ladies and gentlemen, if you can do it once, there's no reason why you can't do it again. Right? It's just common sense. The fact that you've done it once should give you so much confidence. As long as it wasn't just a fluky buy, 5 contracts, scalping 2 ticks. But if you had a solid plan, you traded it, you executed it properly, then geez Louise, guys, that's amazing. And so you want to reference that. You want to journal that stuff. Alright? Morning, Alex Crip. How you doing, brother? Journaling is a big topic. We're actually doing something soon inside of RP. Our Elite Trader LP is going to be doing a live session on backtesting. How to backtest, how to journal, that sort of stuff effectively. Getting ready for New York Friday. Oh, here he is. Here he is. Speaking of the devil. LP in the house. LP in the house. Phenomenal trader. Give this guy a follow. If you're not already following him. Amazing trader. So 2K day on the PA yesterday. Axe crypt. Ha, bosh, brother. We're gonna have a big D exercise. How much did everyone bag yesterday? I don't wanna say my number because it's just I don't like it. I think it's I don't know. I don't like doing it. It's a bit of a dicky thing to do. It's just like, oh, yeah. Like, how does that help anybody? How does it help anybody? It doesn't. It's a short answer. It just makes people feel inadequate, right? Makes their pee-pee retract like a little turtle's head, right? That's not what I'm about, right? I'm here to encourage, right? Motivate and teach and guide and help everybody else achieve those figures, right? I don't need to sit on top of the mountain and go, look at me. I've got no interest in doing that. Absolutely none. But you guys seeing your figures is awesome. I love to see that stuff. So the fact AxeScript making 2K on the PA yesterday is phenomenal, brother. On the PA as well. Jeez Louise. Awesome stuff, AxeScript. Love that. Love that. So AxeScript, was that the trade out of accumulation? The 50% range, was it that trade? What were we trading? Or was it the retracement in the PM session that we absolutely ripped a new, can I say a-hole? Can I say that? I don't even know. Is that a swear word? A-hole? Borderline. It's borderline, isn't it? So guys, if my YouTube stream just like crackles and pops and then just goes whoop, flatlines, you know what's happened. I've been taken off grid. They've X'd me. They've taken my name and they've made it a reality, right? TradeX, boom, gone. See ya. AM seek and destroy. Oof, AxeScript, sexy stuff. Plus PM. So AxeScript has been with RP for a long time now, and he is a testament to hard work, turning up every day, sticking at it, and just engaging with the community, learning, always asking the right questions. Passed his eval not so long ago, and now look at it, 2K on the PA yesterday. You don't understand how amazing that is. It makes it all worthwhile. Without seeing little things like that, it's like, what's the point? I might as well just go back into my little hole and just trade in my little hole, right? So that's awesome stuff, AxeScript. Good stuff. I love to see it. Oh, it's 5 digits, 10. 5 digits. It's 5 digits. On 3 PAs now. Ah, bosh. Ah, bosh. Three PAs. Awesome stuff. So what's your plan, AxeScript? Let's talk about that. What's your and by the way, just to let you know, I am currently in a trade. Right. That's why I'm not talking about trades at the moment. Good stuff, AxeScript. Such a good feeling seeing it pay off. Keep it up, working my way slowly. Awesome. So good to see, man. 3 PAs. So AxeScript, talk to me. What's your plan with those 3 PAs? How are you going to manage them? Because it's important. I can tell you how I manage mine. But I want to hear you. I want to hear yours. I want to hear how you do it first. Needs to break this, but we've got, these are just runners for me now, so I don't even care if it takes me out. 1 made on its own and 2 copy. Okay, cool. Right. So are you giving those accounts different, trading styles, like personalities, how you're going to trade them? All right. So what are they? Main PA, low hanging fruit. Nice. Nice, nice, nice. Nice. Okay, so all very good stuff, ActScript. Everything you should be doing. So just in terms of like my main PA account, like so my main one, it's only A+ setups, right? It's only A+ setups. So for example, the monthly order block was traded with my main PA account, right? Or, you know, when we traded the highs, right? That's how I use that account. And then my other and I literally will only take like one, max 2 trades a day in that account, right? So that's it. That's like my main trading account. And then my other accounts, I have a very busy account, which I can basically, if I want to trade, because I can, if you know, like yesterday for example, if you saw my trades, you know, if I really want to get busy, I can get busy, right, and just trade every swing high, swing low. It's not that one. Where is it? Right, so this was yesterday, right? So if I want to trade every swing high and swing low, if I'm dialed in, I can do it, right? If I really want to get busy, and you know, that's my busy account. Well, I trade fluctuations, and then I have a set of copy accounts. But I've turned my copy trader off recently because I got absolutely stung on it. I lost a shit ton of money when the copy trader fucked me over. So basically, I added into a position, like parlayed into a position, but for some reason it took out all of the stop losses and profit targets. Didn't realize. So the others just melted. It's just so I lost a lot of money. I didn't lose the accounts, but I lost a lot of money, which was frustrating. So I've turned the copy trader off at the moment. So I'm just basically just trading those individually at the moment. But that's how I trade. So yeah, just be careful with copy traders. If you're trading your PA accounts, you can get burnt trading those. You know, you are open to risk. Right, so let's have a look at today. So oh, by the way, have you seen the RP merch? Yeah, boy. Yeah, boy. Right. So where we are, we're sort of stuck in between the two new weekly opening gaps, right? So if we're looking at these, whoa, pardon me, the two new weekly opening gaps, We've got one up here, then we've got one down here, right? So we're sort of in between the two. So you got to ask yourself, which one is it more likely to draw towards? For me, the jury's out at the moment. The jury is out. I need more confirmation from the news at, what time have we got the news? We got news at 9:45, so we got PMI, and I think that's going to force the direction of today's price action, right? But for me, if I had a gun to my head, the thing is, I don't like the flat top on the current daily candle. I don't like that. But so I can see that being wicked through, which would obviously mean we would go and take out the high and probably run into that balanced price range that we've been talking about on the daily. But on the other side, you know, we have this BISI, which is left unfulfilled. We have a lot of liquidity down here, and also we have this new weekly opening gap down here, which is like bookends of price. So at the moment, I'm currently long, and the reason why I'm long is for those who will know inside of RP that this accumulation inside of fair value, essentially I traded the turtle soup of these relative equal lows that were down here, right? Turtle soup, entry off lows, looking for price to pull up into this range. So, you know, that's currently my trade, but it needs to get, you know, this why I take the majority of the lines portion off here, because it's the midnight open price. It could just, you know, mess around below here for a bit. So if you look at the hourly candle, we have wicked out both sides. So we've taken liquidity on both sides, which again isn't helpful. So for me, I'm keen to see if this low remains intact. So this Thursday low. If this Thursday low stays intact, you can see us running high. If this breaks, I'd anticipate us drawing down into this BISI. So that's how I'm playing it. My eye is on this low, right? So essentially yesterday's low. If yesterday's low holds, then I'll be looking for price to draw up, potentially to come out and take out yesterday's high. But if this breaks, then I'll be looking for bearish price and looking for PD raise down towards the 9th new weekly opening gap. But this time last week, we were trading up here, right? You know, so if price wants to go back to where we were last week, then, you know, price would want to draw back up into this range. So my low hanging fruit would be 59. Which should be coincide with a gap fill, right? So as always, I'm keeping an eye on what Dixie's doing. Dixie's on a bit of a, you know, a Hulk boner at the moment, off on one. But I'm keen to see where SPX opens up in relation to this fair value gap. You know, is it going to want to go and fill this and then dump? Is it going to want to gap low, move higher? So I'm keeping an eye on SPX. Also SPY's, you know, huge gap down, so keeping an eye on that. You know, that's playing into price moving higher. So just waiting for more information. Waiting for more information. We have got this low here, so we've got divergence on the lows. You can see how NQ took this low, whereas ES is respecting, YM's respecting, so this is currently bullish. But a target for me, if price wants to run low, is this 96, 97 level, which is taking the low, which NQ's already taken. Exactly how we traded yesterday's PM session. Ah, hi Anna. Welcome. Glad you liked the document. Was that the which one was that? I've got a few of them now. There's quite a few. There's quite a few flying around, so I don't know which one you've seen, but I'm imagining it's probably the entry techniques. Which is essentially volume 1 in my playbook. Anna Edouard. That sounds like a French name. Is that French? Sounds very French. Edouard. Is Anna dipped in, dipped out? It's 1 foot in, 1 foot out. Wasn't quite sure. Arrived here, didn't like the vibe, got out. Just a slow typer. Latin Americano, eh? Very nice. Well, nice to have you on board, Anna. Glad you found that document useful. If you have any questions, feel free to reach out. So for now, 50-50 coin flip. Well, maybe with the news catalyst pushing in the direction the market decides, we'll be watching for any movement we may get here in overnight sales price news, leading Bush as well. Yeah, exactly that, Eric. Just need more information. There's absolutely nothing wrong with that. So when it's like that, I literally just, you know, if I want to trade, I want to trade like 5 handles, which is essentially what I've done this morning. I trade liquidity. It's very, very simple. I just trade liquidity. You know, if I just want to get my trade out the way, like before I did and sort of came out onto YouTube and, you know, set up Red Pill and servers and everything like that, I just kept myself to myself. And what I'd normally do is that, you know, I'll be done now, right? You know, I've banked $1,000. I've got 2 runners left, you know, that would be it. You know, and I wouldn't trade for the rest of the day. You know, I'd literally, you know, if the bias isn't, you know, 100% clear, that would be me and be done. Whereas yesterday, you know, it was like every pivot high, pivot low was as clear as day, as clear as mustard, right? So when it's not clear, you just literally move to the sidelines. There's no need to force anything. Absolutely no need to do that whatsoever. But if we can look at this yesterday, right? So this is interesting to note. Okay, and by the way, for those of you who were trading with us live inside Red Pill yesterday, I mean, can you get more accurate in terms of picking a daily high than that? Literally to a tick. The documents, the ICT entry, the entry techniques using ICT concepts, like the newer AM session, reversal, 2 p.m, that sort of stuff. Sweet, nice. So I'm not going to talk through all this because this is specific to people inside Red Pill. You know, I can't give everything for free on YouTube. It's not fair for those who are inside the dedicated community. All right, but what we can touch on here is SMT. So what was interesting is when we were up here, which was this 2250, which was essentially the lower quad of previous Thursday's RTH gap. I know, mind-blowing stuff. And there were further confluences there. I was talking about this low as being my target. Okay, I was still in longs, so I didn't trade this, but I wanted price to get up into this this 0.5 standard deviation and then going for it. But I was still in longs, so I didn't take this trade. But the premise was to come and run this low for a very clear reason, and it was for SMT purposes, right? So let's go back to 3 o'clock yesterday. Okay, so this is all we need for now. all we need. So when I see this, and we're coming towards our target, so our higher time frame target, right? This low becomes a low that I'll be targeting. In fact, you know, in hindsight, right, this low here, because, and I marked it out on my chart. You know, I was clear as mustard yesterday, right? This low. So this, I marked this out on my chart when we were here, right? And I was saying this is my target, and this is the reason being, right? This SMT divergence that we had here between NQ and ES, right? So when NQ took this low on behalf of ES, it gave bullish bias for price to run up into those targets that we were looking for on the higher time frame. However, when price fulfills its objective, what is literally the easiest target, you know, because everyone goes, okay, it's okay getting into a trade, but how on earth do we then go and pick our exits? How do we do it? How do you do it? Well, this is an example of how I do it, right? So yes, you can pick PD arrays. Yes, you can look for liquidity pools. Yes, you can look for blah, blah, blah. But this is another example of picking your exits, right? Using SMT lows or highs, depending if you're bullish or bearish. So I've done a full episode on how to trade with SMT on my YouTube. It's the 3 ways in which I trade SMT. If you haven't watched it, guys, I highly suggest you down watch it. I've had lots of people reach out to me in DM saying it's helped them a lot. You'll probably need to watch it 3 or 4 times because it's quite a deep video. But it's everything I do with SMT, right? And this is one of them, right? So if I see NQ take this low on behalf of ES here, later this becomes the target, right? For ES to come and take this low, right? So when price was up here, this was the easiest trade for 10, 15 handles. The easiest trade, right? Price meeting its objective, running down to take the low, which NQ took previously, right? But you must have context. Context being that price has reached its target, okay? So you need to be understanding of where price is leading to, right? And again, that's comes with development, time and experience, that sort of stuff. And you know, but if you can get to an understanding where you know that, okay, well, price has maintained it, hit its target, and we have this low, which NQ's taken, we've got this pivot, like, you know, this becomes one of the easiest trades you can take, right? Essentially for ES to come and play catch up, right? So if we look at where we were yesterday, okay, so this was that low on the SMT. You know, so many people would be going, well, am I targeting this low? You know, am I targeting this low? No, you're targeting this low, right? That is your low. Right? Okay, so if you're not confident with trading or picking these highs, and we were very, very clear about these highs yesterday. There was multiple reasons why we had this high. I'm not going to go through them all now. You know, that's for people inside RP. But if you knew the reason for this high, well, and you weren't aggressive here, well, then you could just use, you know, the standard ICT principles, right? Even if you didn't get in aggressively on this level, right? There was no reason why you couldn't have got in on this fair value gap. There's no reason why you couldn't get in off this order block. There's no reason why you couldn't get off this order block. So what are we doing if price, if we're expecting price to move lower, right? We're looking for order flow to support bearish price action. Yeah? Right? So if we're seeing price support bearish order flow, is this not giving you an indication of an entry? Right? Price moves up into this bearish order block after hitting this target. Moves lower. Is it supporting bearish order flow? Yes. Does it break lower? Does it leave a fair value gap? Do we get a market structure shift? Do we get a sweep on sell side? Do we have a fair value gap left behind? Yes, 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 yes. Right? So even if you got in here, you stop above that OB. Almost a 4-to-1 R. And that's not even you getting in aggressive. Right? I personally always get in aggressive. 19 down to 13, there's your 5 handles. That is trading using SMT. Right? Let's recap. We're expecting price to draw up into a target, a level that we've predefined. We see previously NQ had took the low on behalf of ES, and we have confluences. I hate it when YM does that. Fucking move YM, it just goes nuts. Don't go nuts. Don't go. Why are you doing that? God, I hate. YM's always that weird one, isn't it? There's always a weird one. YM's the weird one. Where's it taking me now? Right. Let's just leave YM out of it. But YM, just know that YM was doing a very similar picture to ES at the time, right? So ES was supporting, YM was supporting ES at the time. But we're looking for price to run into its target, our predefined target that we had seen, supporting bullish price in this instance because we saw NQ sweep the lows on behalf of ES. This is classic SMT divergence. NQ loves to sweep lows. It is the turtle suit king. Right? So if we see this low that's been taken on behalf of ES on NQ, this then becomes the target when price reaches its objective. Right? Now you're just framing entries to go short to come and tackle that low. Right? Target reached. Look to frame an entry to go short to tackle that low. That is your trade. Right? What could you have targeted? Right? That's a MIT block, but you're targeting the liquidity, right? So you could take it to the low of this MIT block, anywhere below this liquidity, anywhere. One tick below, literally a tick below, because it can turtle suit and move in the opposing direction. But it's going to come and take that low. Right? It's going to come and take that low. Right? And you stay in it until it takes that low. Right? So in reality, well, it's over a 4-to-1 up. Right? Does that make sense? Any questions? No? Okay, cool. The key to SMT, Eric, is first and foremost, you need to, as always, you need to know draws and liquidity and directional bias. That's the key. And you need to understand where price targets are and likely to be. Then you can utilize SMT effectively. But if you're just simply using SMT and you're trying to find fluctuations in price, you don't know what you're looking for. You're like, oh, is that SMT? Is that SMT? Is that SMT? Right? So as with anything with ICT, you have to have stuff in context. It has to be supported by other confluences. It's gonna go just for pure shits and gigs. I'm just gonna look at. No, I just swore, didn't I? God damn it. Again, you had just on yesterday, this is where we went long yesterday. SMT on the lows. Right? NQ supporting bullish price action. ES purging the lows before moving higher. The lows had already been purged here on behalf for NQ. NQ had already taken the lows here, right? So when NQ here is now respecting this low, and ES is taking those lows. This is SMT divergence on the lows, supporting bullish price. Yeah, in a nutshell, Anna. But my advice on every Friday, right? My advice every single Friday is to just get 5 handles and get gone, right? We call it 5 handle Fridays. Okay, you don't want to ruin your weekend just trying to chopping around with price. Okay, just get your 5 handles and be gone. What I would say is we have a high impact news event at 9:45 today, so probably the best thing to do is don't trade until after 9:45. So do you have the patience to wait until 9:45 and see what happens with price, and then you can trade accordingly. Right? Wait for more information. Right? You don't have to trade every session. You don't have to trade every fluctuation in price. Wait for more information. We have news at 9:45. Wait for price to show its hands, and then you can trade accordingly. Right? And you can use those principles, Anna, that you've got in my entry techniques, right? Using ICT concepts. Okay. You know, so if this just decides to continue to melt, you know, all the way down to, you know, 11:30, at 11:30, you could wait for a pullback into 50% of the range. Right? There's a whole host of things you can do. Just wait. Stay patient. Right? Stay patient. But things to be mindful of going into this session. So we have a gap left to fill on the RTH. So, oh, my ass hurts. This RTH gap, that's still left open. So if price wants to be bullish, you could look at that as a potential gap fill, moving back up to the new weekly opening gap, up at sort of 54.60. Whether it gets up there is questionable. The reason why I say that is because we have this balanced price range on the daily. So when price gets up into this balanced price range, I'll be looking at these quadrant levels on the H1 and also the lower time frame for price to respect it, to potentially take price short again. Okay, so I mentioned this yesterday. I'm anticipating this BPR to become a magnet and price is oscillating either side of it for a period before we get the eventual sell-off, right? So I am expecting price to draw back up into this daily BPR. Whether it happens today or not, the jury's still out. But this is without doubt going to be revisited, in my view, before we sell off heavily, right? Before we, tank. But if price wants to, so that's on the sort of buy side. If I was looking, I'll be looking at price to sort of reverse back into this new weekly opening, this RTX gap, and back towards that new weekly opening gap. I'll be looking for imbalances and inefficiencies on price en route. So this SIBI up here would be a target. I'd also be mindful of equilibrium of this wick as a target. So if you're looking at partials, this is where I'll be looking to reference where price is likely to reject from. We also have this breaker block on the hourly. Okay. So I'll be mindful of that. It's around 27.50. So I'll be looking to see how price respects these levels. Okay. And just trade accordingly. Now, if price is going to move to the sell side, then obviously we have this BISI, which is currently left open with all of this liquidity that's sat below here. So if we're thinking about weekly profiles, we've had Monday, Tuesday, Wednesday sell-off, Thursday retracement for a potential, for me, Friday sell-off versus a V, which would essentially just be price retracing on itself, basically going back to where we were. I'm not so sure on that. So if price breaks below this BISI, then obviously we got the new weekly opening gap. But you can see at the moment, the reason why the jury's out for me is because if we look at where we are, we're sort of at the event horizon, right? Between the two new weekly opening gaps. We've got one here, which is this purple line. The reason why it's purple is this is last week's RTH level. So this time last week's Friday open and close, right? And so price will often revisit those like it has been doing all week, right? So these are previous week's RTH levels, and you can see how we've just been chopping in between them, right? So that's why it's purple, but this is the new weekly opening gap, right? If you actually zoomed in on this, you can see the new weekly opening gaps there, right? This is just below it because otherwise I can't see it on my chart, but I know it's essentially this yellow line, right? There's new weekly opening gap. And we have another new weekly opening gap down here. So we're stuck in between two new weekly opening gaps, which means the jury is out. You have to act accordingly. Wait for price to show its hand. How's this trade coming along? So I'm going to be doing an absolute monster of a YouTube session today. I'm going to be doing a monster of a YouTube video over the weekend that'll be dropped on Sunday. I don't know what words just came out of my mouth then. So stay tuned for that. It's going to be an amazing video, very, very helpful on one of my entry models. What do you mean, AppScript? So again, you've got SMT on the lows here. ES has taken these lows, and Q is showing strength. I'm going to take my next partial I'm looking at is this. I mean, interestingly, I'm currently long, so my bias is slightly different. But this is what I taught recently on YouTube, which is looking at price action on lower time frame and how that's interacting with higher time frame PD arrays, right? So this green candle, this down close candle is a bearish order block, right? And if we look, when this candle was running into the open and close of this bearish order block, what had price done on this price leg, right? So price had ran down, swept this relative equal lows, so swept this liquidity that was down here, and then retraced back up into OTE of this range, right? Which is why I took partials here, by the way, which is also the midnight open price. But interestingly, you know, if you wanted, you can trade this short for this reason, right? This is a SIBI which is filled. Okay. So this becomes an intermediate term high, right? So you got a combination of factors here. You don't have to trade this, right? You don't have to be aggressive here, albeit I'm an aggressive trader, right? That's my trading style. I'm an aggressive trader. So I'll get in at these levels. I prefer to get in right at the high, right? Now, if this is an interim term high, what you can do I not everything AP. I haven't spoken about all the stuff we spoke about yesterday in terms of accumulation, fair value, how to trade, search and destroy profiles. This is they don't get the pure juice. They get some sauce, not all the sauce. So this is a return up back into this OTE, right? But we're looking at what this is doing on the lower time frame in cahoots with the higher time frame. So this is a bearish order block, right? This fills this SIBI, becomes an interim term high. So when price returns back, you can go short here with your stop above that interim term high, because an interim term high should not be broken above. Right, so if you're talking about trying to trade your 5 handles, there's your 5 handles. Right, what are you searching for? Liquidity, inefficiencies in price. Where's the inefficiency in price that price has run back into? This fair value gap. So this is using higher time frame tape reading, but you looking at the lower time frame to depict interim term highs inside of an OTE after a displacement. All sounds very, very complex, very, very complex, but it's not. In reality, it's really, really simple, right? It's really, really simple. But obviously, I'm still long. I could be wrong, but I'm long, so I'm not gonna go. I'm not gonna, you know. I'm just gonna keep my runners. My runners. Allowance to slaughter. But this, theoretically, you know, should not be broken above until price gets down to its objective. then this can be broken, right? So when price gets down to a discount, or it fulfills its objective, and if it wants to move bullish, then these will be taken. But if price is to remain bearish and it's searching for a lower target, so if your bias is to come and take yesterday's low, well, this could be an opportunity to go short with your stop above the interim term high, right? But what I'm saying is, I prefix that by, you want to be waiting for news, because what are we likely to have ahead of high impact news event? Well, we're likely to have search and destroy type conditions where buy side and sell side liquidity is just tagged. So this is what I was saying previously, is what I do in these types of conditions is I just trade liquidity. That's all I'm doing. I'm just trading liquidity until I can trade with the day's directional bias like we did yesterday, and we take 20 odd handles, right? So if I want to take 5, 10 handles, I can. If I want to take 20 handles, I can. But it's all dependent on the environment and the conditions, the market environment that we're trading within. Moving into the period between now and the New York Open is always garbage, right? So I would not suggest trading this section, right? And then this is likely to be choppy as well as we move into 9:45 with the news, the flash PMI coming out, right? So if you're trading inside of the London kill zone, right, which is when you should be trading if you're trading in the morning, this could have been an opportunity to take your 5 handles during the London session, right? So if you didn't take this long, you could have taken this short. And this is why, just to recap, we're looking at this range here. This range has come and swept this sell side liquidity. Let's move back up into OTE of this range. That in itself is not enough to go short. But what do we have on the higher time frame which could reference as a reason why? Well, we're looking at this candle run into this hourly order block. The body and the close for me are the most respected areas in an order block. Unless it's stretched out, then you can use quadrants, but I'm always looking predominantly at the open and close, right? Now, this is running into that on this hourly order block inside of OTE after filling this SIBI. This now becomes an interim term high, right? So when price returns back into this range, because it will, when it returns back into this fair value gap. And guys, if you haven't watched my video on interim term highs on a lower time frame on YouTube, it's essentially this, right? And we go through loads of examples in that video. So if you don't believe me, then bloody watch it, right? I just swore again. Please don't ban me, YouTube. I'm sorry. I'm a nice guy, really. I repent for my sins, right? So price moves back into that fair value gap. You enter anywhere inside this fair value gap. CE, you had the midnight open price, could have been a reference point. Anywhere inside this fair value, you can go short, right? Targeting the liquidity, search for an inefficiency in price as your target, right? There's your 5 handles, okay? Does that make sense? Does that make sense here? So it's not a huge trade. This is not trading with directional bias. It's got nothing to do with that. This is simply trading liquidity. Right? So when the conditions don't allow for, I'm going to get in here and I'm going to absolutely slay this for 30 handles and I'm going to sit in the market for 2 hours, 3 hours, 4 hours, like we did yesterday. Then this is how I trade, and this is how you should trade, right? You're just trading liquidity for your 5, 6 handles, whatever it may be, right? And that is all you need on a Friday, right? That is all you need to be done, right? To sail off into your weekend. Happy days, bish bash bosh. Thank you very much, right? But as you can see from this chart, I am currently long. So I could be proven wrong. Price may, come back up into this level and reject. I don't care if it comes and takes me out. I've already taken my lion's share. I've banked a G, so I'm happy. Right, but I'm going to stay in it for continuation if it wants to push through. But what we're talking about is trying to frame low risk, high probable entries. Okay, that's all you're trying to do. And then all you're doing is just managing your exits, right? With PD arrays and whatnot. Okay, but your job is to get low risk, high probable entries. Well, is this not a low risk, high probable entry? Yes. Is it clearly defined? Yes. Is there any ambiguity in this trade? No. Do you know exactly what you're doing, where your stop is, where your profit target is? Yes. Then it's a trade. Right? Then it's a trade. You trade it. If it goes past and blows through this interim term high, that's just trading, guys. Stop thinking that, so 100% of the time you're going to be right. It doesn't exist. It does not exist. But small losses, big wins. What is this as a drawdown? Just short of 2 handles? Less than that. 60? 50 bucks? Right. Who cares? Who cares about a $50 drawdown? I don't. Right? But as long as you can start stacking confluences, this is how you frame a high probable low risk entry. You can't just say, oh, because it's an OT, I'm going to go short. Right? You can't do that. Right? But if you have context for it and the stacking of confluences, then yes, you have a reason for a trade. Everybody get it? Does that make sense? Everyone get that? So the reason why I am long AP is that I'm expecting search and destroy type conditions ahead of the news at 9:45, right? So if you remember what we were talking about yesterday, what is this? What is this, AP? You don't have to say it. You don't have to say it in YouTube. You can say it in exactly. So, but what type, AP? What's it actually doing? So I've got the server, the Discord. I've got the Discord server on a different screen. Exactly, AP, right? So if price is going to turtle soup this liquidity, right? Would this not be an opportunity to expect price to rally back out of that accumulation, right? Looking for price to move back into this range. So this low here, yesterday's low down here, right? So I wasn't anticipating this low to get taken during search and destroy. I'm anticipating price to be pulled back up and just chop about and consolidate. All right, so this frames my reasons for going long. All right, back inside of all of this. Also, having seen this huge sell-off. Right? Yeah, we talked about this in depth yesterday. In terms of how to trade this, there's a set way on how to trade this, right? There's a set way on how to trade this. There's a very, very clear and easy way to trade this. But this candle, this hourly candle, which is basically wicked out both sides of the liquidity, it just in terms of like picking immediate directional bias and draws and liquidity, makes it very, very tricky. Right? That's why you need to wait for more information and more news. All right, guys, I'm just going to make myself a coffee. If you have any questions, let me know. I'll be back in a bit. I'll stick out this disclaimer just so I don't get stuck in court. Hey? I'm back. How we all doing? Has anyone got any questions they want to ask? Because soon I'll be leaving the old YouTube. So if you've got any questions, now's the time to ask. Shush. Morning, Ainsley. Good morning. You missed a bit of a sesh this morning, Ainsley. I'm going to be dipping off very, very soon today. Back into the old RP. I'll come back for after the news. Well, not to YouTube, but yeah, the best thing to do on Fridays is just get your 5 handles and get green. Get green, get gone, right? And then if you're going to trade, just trade after the news. Very, very simple. Or if you're going to trade ahead of the news, you're just trading liquidity. You're not trading directional bias. Right? You're just looking for liquidity. This, for example, these 5 handles. This is my current trade. They're just purely runners. Purely runners. If they take me out, I do not care. Already taken the lion's portion off. Already bagged a good amount. So don't ask me how I've done it, but I trimmed my beard today, and somehow I've managed to get a splinter from my own hair. Like, what's all that about? Fucking painful as well. Grrr! Rock hard! I swear, mate. When I was like, fuck, whoa! Stop swearing. When I was like 12, I had a beard. Honestly, I think I had my first chest hair when I was like, I don't know, 13 or something. Wiry little things. Now, grrr, can I sell that stuff to wash your dishes, you know, like a little, what are those things called? Loofahs. It's like a loofah. Just patent my beard as a loofah. I swear to God, it's a stinger. I don't know if you can see that. You can see that, don't you? Anyone got any questions? Or are we just half awake this morning? Josh, hey TradeX, when will you be realizing or releasing? It's fucking painful. This releasing the 2022 entry model video. It's such a bog standard thing. I like my YouTube videos to have, you know, meat and potatoes. I like to get to the you know, the real juice, right? Not the stuff which people are just cherry picking from ICT videos and just regurgitating. You know, I want my YouTube channel to be just pure inundated. What's that word? Inundated with pure juice, right? Genuine juice, stuff which is tangible, which is actually going to help you long term, not just regurgitated stuff which is just very bit part, right? So I will do a 2022 model, but they're very simple, bro. It's like, you know, there's not much more else I can say on it. That ICT's already said it. You know, it is what it is. All right. So let's have a look. We can do a live-o. We can do a live-o. Go live and direct. Live and direct. Okay. Joshua Katua. Thank you. I'm using the 3-drive pattern entry in Judas swing. Thank you. Utilizing the hidden IP. Awesome. Good stuff, Joshua. You finding success with that? You want a copy of if you guys haven't already got this, then I'll put it in this little lobby for you folk. Bear with me 1 second, Mondo. Alright, you want this. This is what you want. Alright, this is what you want. So if you've not already seen that, that's what you want. Alright, so essentially that's my entry techniques volume 1. I'm currently doing volume 2. That'll be released much later. It's slowly being released in RP at the moment, so they always get it first and foremost. But this is volume 1. Right? So if you want some further stuff to look into, then I highly suggest you going into that. But right, 2022 model. So what people tend to get wrong is the context of when to use a 2022 model. Right? So when we are like what I want to say, because I'm gonna give you an in-depth. I'm not just gonna give you some bit part regurgitated BS, right? I'm gonna give you the juice, right? But you got to listen to the full juice, otherwise it's not gonna make sense, right? You cannot take ICT concepts in bit part form and apply it to the charts and go, bingo, I'm gonna make money. Rule number 1, right? You have to have confluences stacked in literally everything that you use with ICT. And you build a model around that, right? By piecing parts of it together to build a model. You can't just say, I'm going to take this little pattern and I'm going to trade it, I'm going to make money. You're deluded if you think like that, okay? So please don't listen to these Twitter folk or who are just posting, oh, this is a 2022 model. Like, it means nothing. It means nothing, right? It doesn't help and it is useless information, right? I hate seeing that stuff on Twitter. Oh, here's a little 2022 model. Okay, context, right? That's helpful, and that's what I want to talk about is the juice. The juice is what's important, right? So we have to know when to be using a 2022 model. That's the secret sauce. Not what does it look like. That's the easy bit. How to get in is the easy bit. What does it look like is the easy bit. Right? When to get in. When to use it. How to take exits. Right? That's the juice. Okay, so we'll go through that. So the first and foremost, we're going to go through a bearish example here, right? There's grades to a trade, right? There's always grades to a trade. Where it's C minus, C plus, B minus, B plus, A minus, A plus, right? And personally, I have different accounts set to how I trade those different setups. If you don't know the difference between a C minus setup and an A plus setup, you've already got work to do, right? And that only comes with time in front of the charts. But an A plus 2022 model is what we're going to discuss today. So this is what, if I was to, teach I hate the word neophyte. It seems like such a degrading word, or like a condescending word. But I'm gonna run with it. So I don't mean it that way, but it's kind of used in this context. But if you're like a neophyte trader or newbie trader, however you want to call it, I always suggest staying patient and wait for A plus setups. And then when experience builds, then you can start looking at B plus, C, B minus type setups where you don't have as many confluences to form the context to get to an A plus, right? But we're going to talk about an A plus here, so just bear that in mind. Now, for an A plus, you want to be inside of a higher time frame premium. This is note taking, guys. A plus 2022 model. You want to be inside of a higher time frame premium. Okay? Are we inside of a higher time frame premium? Yes. Okay. Rule box number 1. That's on the daily. Then we're looking for a higher time frame PD array to be hit. What do we have here? And this is the day we went short. We have a monthly order block. So if we just jump onto the monthly, this down close candle, the wick, monthly order block, you should have that delineated on your chart. Right? We also have a weekly just above it, but regardless, we're looking at this monthly order block. Is that not going to be our respected level? Of course it is. A monthly bearish order block inside of a premium, right? You're expecting, we were inside of RP, expecting price to reach up to that, and this is where we framed our entry short. Okay, so now we are inside of a higher time frame premium. We have hit a higher time frame PD array inside of a monthly order block. Guys, we are now setting the context for a 2022 model. Not just, this is a 2022 model. Fuck off. Sorry, don't ban me, YouTube. Right? So now let's go and look at this closer on a higher time frame. What have we had here on the higher time frame? Context, guys. Context. The bit that those little Twitter traders who still sit in their mum's front room, hindsight trading of 2022, are presenting bullshit, right? Context, buy side. What have we had here? A sweep inside of a premium on H1 into that monthly order block on a higher time frame, right? What are we now looking for on the lower time frame? Now we can go down to our execution chart. context. What have we got here in this range? Someone please tell me what this is. I'm going to give up on life. Someone tell me what is this? What is this? What is this forming or giving the potential to? Someone please answer that. Someone must know. Don't leave me hanging. You've all got my entry techniques. Project entry techniques. So what is this? AP. New York AM session reversal. If you still don't know what this is, guys, geez Louise, there's not much more else I can do. Right? I've given you all the information 1,000 times. You've got my documents. You've got the YouTube videos. If you don't know what this is, not much more I can say. Right? So, New York AM session reversal. Context. Context. Right? So, we are anticipating price to want to come and return back into this range already. Okay? If you don't know what a New York AM session reversal, guys, you've got my document there inside of the chat. Go to New York AM session reversal and study it. It's one of my favorite entry models, okay? And I am going to get to 2022, but this is the juice that people miss out on and don't teach you and don't tell you, right? Sit on Twitter and look at that garbage all you want. It's not going to help you. Right? Expecting a reversal, a New York AM session reversal. I'm not going to talk about New York AM session reversal today. You've got the study notes. If you want to ask me any questions at another time, you can. Right? But we have a run up, taking out this liquidity buy side on the H1 into a high time frame premium, into the monthly order block. Does this not set the grounds for an A plus 2022 model? Right? So, what do we have here? We have sell side. What are we looking for? Displacement to take out sell side. Right? To take out a clean pivot low like this. Also known as, who can tell me what this is also known as? What is this? When price breaks through this level, what is this? No, what's it? Market structure shift. Exactly. Right? Right? So, we have now taken the buy side, ran up into those levels we were talking about. Market structure shift with displacement. Now what are we doing? Who can tell me what we're looking for now? What will be the next step? Live your life. And how would we do that, live your life? Live your life, live. Fib. Exactly. So, we're going to take a fib across this range. Eunice. Ah, good stuff, Eunice. Cool name, by the way. So, we're looking for price to return up into a premium. And what would we be looking for inside of that premium? As Joshua said, looking for a fair value gap. Guys, that is your 2022 model A+. Do you think I went heavy there? Do you think I went heavy there? Well, for those inside Red Pill, you'll know that we did. Right? Now, it's all well and good getting into this. How do we get out? How do we get out? Who can tell me how we get out of this? Nope. As a partial, sure. Sure. Yep, you could say that. So we'll mark that off. In fact, I'll just leave it as that for now. Okay, so partial. What else could we do? What else could we do? And we're going to talk about this specific model that we're in now. So this again is context. Not just 2022 model. Context. So what is the context? The context is we're inside of a New York AM session reversal. So now we've got the 2022 model. What are we looking for? There we go. Context. So you could let's start marking these off. We'll say, so if you're going heavy, we're going to mark these off as partial. Okay? How else could we dial in our exits? How else could we dial in our exits? Yeah, we could certainly do measured move. So what range would we be looking to take that from? Junus? Was it Junus? I'm terrible with names. I have dyslexia. Where was it? What's your name, bro? Lost your name already. Eunice, that was it. So, the hourly range. So we're going to talk about this 1 minute chart. So how would you, out of this, you know, which high and low am I taking to project my standard deviations from? So I'm going to put my cursor over the low, and you tell me if it's right or wrong. Would we use this low to project our standard deviations from? Yes or no? Right. Would we use this low to project our standard deviations from? Would we use this low? Brilliant. Well done. Okay. Would we use this high? Would we use this high? Brilliant. So we can take the high to low of this range. Why am I specifically using this for projections? So this is, again, context. This is an opening range breakout. You can measure retracements into opening range breakouts for your standard deviation targets. That is a piece of gold that you've just been given. Right? So, one-time standard deviation as a price target. Why? Okay, so here's an advanced question. Why would I pick one-time standard deviation versus, say, 1.5 times standard deviation? I'm not saying you couldn't use 1.5 standard deviation, but that'd be more for a swing trader. But inside of trying to capture a daily range, high and low, why would I be going for one-time standard deviation? Now, this is an advanced question, so I'll be surprised, or it'd be cool if you get it, but it's an advanced question. Why specifically one-time standard deviation? Why not 0.5 standard deviation? Why am I going for one-time standard deviation? Right. Again, guys, it's context. Where is the liquidity in this session? In a New York reversal, where is the liquidity? Nope. The liquidity is the Asia low. That is the sell side. So I'm picking the first standard deviation that is below that liquidity, which is the Asia low. Right? Context. Not, this is a 2022 model. Wow, wow, wee wow. Right? Context. So this is the Asia low in a New York AM session reversal using a 2022 model as our entry, peeling off targets. So our exit, if I can actually get my ting back. You have now just gone from a novice to a professional trader. Right? Now, let's go advanced on this. So how on earth would you manage this? right? 86 down to 57, 30 odd handles. And by the way, a little nugget. When you get to 30 handles, expect a retracement. Right? If you get to 30 handles, expect consolidation or retracement. So, how could you manage this? Well, let's say you took 3 contracts. This is how I do it. You can do it differently if you like, but this is how I trade it. You take one here, take one here, and then your third remains here. This is what I dubbed lamb to slaughter. The lamb to slaughter. If you want to become the next level of trader where you're capturing daily ranges, you have to allow for a retracement into your position. It's okay. You don't have to be that trader. You don't have to do that. It's, you know, you're more, it's okay just to, you know, take this range and be content with that. It's okay. There's nothing wrong with that. But if you want to go to the next step, the next level, you have to get comfortable with allowing a lamb to slaughter. Like this, for example, this trade that I'm currently in. I do not care if this takes me out. I literally do not care, but this is a lamb to slaughter. There's actually 2 here, right? But I've taken the lion's portion off. It can go, it can come back on me. I don't care, but I'm allowing my trade to breathe, okay? And this is the same premise right here, okay? You're taking one off, you're taking another, you're keeping your third above your stop. Because you're expecting price to pressure your position. Market makers do not mind people taking 5 handles. They don't mind that because they have to allow people to win a little. They don't want them to win big, because if they win a little, more times than not, they're going to lose that little in getting the wrong trade, right? So eventually over a period of time, they'll give all that money back. So they don't mind you winning little, okay? They don't. So what they'll often do is they will, once you're in your position, they'll pressure it, right? They'll pressure that position because they're trying to take you out. And this is where Terry came from, right? Because the neophyte trader will choke their trade. So they'll move their stop just inside of profitability because they don't want to lose that position, especially if they didn't know how to manage their trade. They didn't know where to take partials. They've taken none off the table, and now they're seeing price come back on them, and they're going, oh shit, oh SH1T, here we go. I'm going to move my stop just here. I don't want to lose my money. And they get taken out only to then see this or this, then this. And they go, God damn it! My directional bias was right. I knew exactly where price was going. Yet I only made $80. Yet, how on earth did, name any trader, manage to make $5,000? We were in the same trade. This is how. Trade management. It's all well and good getting into the trade. Now can you manage it? Trade management is massively overrated. Massively overrated. If you don't know how to manage a trade, you've got no hope. You and I can get in here at exactly the same time. I'll make money. You'll come out with $80. Maybe a loss. Right? You have to have confidence in your setup. You have to allow your trades to breathe. You have to take partials when the opportunity arises, and you have to expect price to pressure you. Market makers do not want you in the position. So what are they more likely to do? they're more likely to press your position to take you out of the trade before continuing, right? Now, especially if we've got a range of 30 handles, which is a lot of money, they certainly aren't going to want the lion's portion of traders to be capitalizing on that range. So what are we anticipating? Well, we're anticipating offset accumulation. Offset accumulation is offsetting those people who are inside of the right side of the move but are getting taken out, and the accumulation is accumulating them getting out. So all those two tick Terrys are now selling their positions into smart money. This is offset accumulation, offsetting those inside the right side of the move but accumulating their stops. Offset accumulation, guys. So this is why we keep one of our positions above the stop, because we're allowing the trade to breathe, right? We're allowing price to continue to our terminus, right? Which is context. Because we have a New York AM session reversal, we're looking for price to run the Asia lows, we're taking partials at equilibrium of the range, and we're looking for liquidity pools, and we're using a standard deviation to go for our terminus below the Asia lows. Guys, professional trading versus a neophyte versus this is a 2022 model, right? Okay. So this is an A plus. This is an A plus 2022 model, not only in its structure, which is what you get on beautifully, I might add, presented images on Twitter, because Twitter has now turned into the take gallery, where it's more important to have a sexy picture than it is to actually have any value. Right? It's like going to a viewing gallery, right? It's like going to the Modern Art Museum. Ooh, look at this fancy color arrangement. Ooh, look how they've done their fair value gap lines. What are you spending your time on that? It's freaking garbage. It really is garbage. So this is the structure of a 2022 model, right? Okay, but the important parts are context. What is the context? The context is that we're in a higher time frame premium. The context is that we've ran into a monthly order block. The context is that we've swept buy side on a higher time frame. The context is that we've had displacement returning to market structure shift. The context is we are expecting a New York AM session reversal given the market profile that's being presented. And now we're in the trade. We are managing it effectively as a professional trader, taking partials on the way, but expecting price to move back on us whilst price ultimately fulfills its objective. If you got in here, guys, this is, and by the way, I got in hyper aggressive. I was in here. So I was in at 9:30, right? It's a day's trade. Right, but if you got in here, for example, just on the classic 2022, and you took it to the end of the day, you're in that trade for almost 5 hours. You tell me how many traders you know hold for trades for 5 hours. 5 hours, guys. 5 hours. It's not all about these little snippets you see on Twitter where you've got some cool hip hop playing in the background. This guy sped up his video and it's only it's like a 5-minute trade. It's like it's feeding into this like mindset where everything has to be now. I need to see it. What is it? What's the latest thing? Okay, cool. God damn it, guys. Come on. That's not it. It's not it. Sure, there's times when you can take a 5-10 handle trade, but it's not sexy. That's not sexy. This is sexy, right? Holding for 5 hours, right? Playing the day's range. managing your trade effectively. Right? So don't get caught in this idea where, you know, you have to take, you know, just 5 handles and be done with it, right? Yes, that's true when you're starting out. You want to get comfortable taking 5 handles. There's absolutely nothing wrong with that, and that's all you need to change your life. But if you want to step up, and you should all be looking to achieve greater things, then the reality is the true gold, like the true you know, I can't think of the word, but you know, the creme of trading is not in that. It's in being patient. It's allowing trades to breathe. It's capturing daily ranges, right? But equally as important is to stay goddamn patient, because these don't set up every single day. So a neophyte trader will be trying to trade every single fluctuation in price every single session. That isn't trading. That is gambling, right? But when these set up, then you execute, right? So this trade that I'm in today, I've been in since 4 o'clock this morning. I've been in this trade for 3 goddamn hours. Right? Am I trying to choke the trade? Am I trying to choke my stop loss up? Am I moving my PTs around? No, let the goddamn thing breathe. I've managed the trade. I've put my PTs where I want price to go to. If it hits it, great. If it doesn't, so what? Who cares? I've already backed. Breathe. Patience. Calmness. Not... Right, how long should one hold the trade after taking the second partial and leaving the lamb on slaughter on? And while managing the trade, should I be moving the stop loss? Right, so I've done just a reference. Yeah, I'll do that in a minute, Liv. Judas. You should be called. You should change your name to Judas. That'd be dope. Junas. I'll do it in a minute. But Joshua, let's answer your question. So there's different ways for trade management. Some people do it differently. Some people just keep their entire position here and not move their PT. I personally don't do that. I keep one back. So I'll always keep one back, right? If that is, big if, I'm expecting range, right? Or the opportunity for price expansion to go for a set target. If I think there's absolutely no hope that price is going to get below this level, then obviously I wouldn't do that. That doesn't make any sense, right? If this is my terminus, this is my terminus. But if my terminus is down here and I've planned out the trade that this is my terminus, then I am going to allow my trade to breathe to terminus, which would mean I'll keep a stop up here, okay? But you have to know where your terminus is, right? If my terminus is here, then obviously I'm going to take my position off here, right? So the way I do it, and other traders may do it differently, but this is how I do it. So let's have this here, right? So we've got these are the 3 contracts here. Come here, you. Right, so there's our 3 contracts. They all stay here until the first one hits my first PT. Right? Make sense so far? So they're all up here until my first PT is hit. So this guy has now gone because he's been hit. So then what I do is I wait for a market structure shift on the next trade, on the next leg, right? So you can see that price has reverted. At this point, I still haven't moved my stops, right? I still haven't moved my stops. When this low gets broken, now I move my stop on my second contract. My third always stays here, right? Okay. So this only comes down to here when this market structure breaks this low in the trade that I'm in. Okay. So then I'm waiting for price to go and hit my second partial, right? Which is this liquidity low, whatever reference point you took, right? So this now gets tagged. Okay, so that's the second contract's been taken. Now my third stays here. I do not move this contract. Okay? And I'm expecting price to potentially offset accumulate before running to the terminus. So my contract stays above my position entry. Right? And it does not move. Does not move. Now, I get when you're doing evaluations, this is tough. Because, you know, you might not be able to weather this drawdown. Okay? So what you could do is you could wait, and I wouldn't suggest this, but what you could do if you've got a evaluation account is on this offset accumulation, you wouldn't want to see this now go above this position once you get a market structure shift again, right? So when this has fulfilled sweeping this sell side, but your position is protected, and by the way, this is an interim term high because it's filled this SIBI, which is what I was talking about earlier, by the way, right? So you're not anticipating this to get taken. Context. When you get the market structure shift, now you could move your stop to here, right? And if you want it to be really anal, I'd never suggest this, but you can trail this if you want. So every time you get a market structure shift, you could trail your stop down. That's if you have an evaluation account, right? Every time you get a market structure shift, you just trail your stop. All right? Until you get those like terminus, like market structure shift. Right? Market structure shift. You get it? But that is professional trade management. Right? Make sense? Everyone get that? Sweet. Guys, if you can do me a favor, if you're finding value, just consider smashing the old like on this video. I'm gonna be wrapping it up soon. Always nice. Appreciate it. Don't be that guy. Don't be that guy. Maybe some more people will see it. Who knows, you know? I'm here to help. That's the only reason why I'm doing this. So, you know, share the love. Share the love. 6 of you have liked and there's 10 of you on here. Very, very dark. 4 of you. Karma is a real thing. You realize that. Karma is real. So what you put out in the world comes back tenfold. Never forget that. Never forget that. So, right, that covers that question, I hope, Joshua. Okay, so the current trade that I'm in. Yep. So this one, right? Oh, where are we? Right, let me just. So, who asked me that question on 2022s? Are they even still here? Or have they just fallen asleep? Oh, it was Joshua. Joshua, are you confident now on 2022s? Like, you don't need to go anywhere else. You don't have any ambiguity. For an A plus 2022, you know what you're looking for, right? Higher time frame premium, higher time frame PDRA, look for buy side sweep. Perfect. Good stuff. Right. I am trading Forex, specializing in the GU pair. I don't go near Forex, brother, so I can't help you there, but I wish you luck with it. But you know, the fundamentals are the same. What were you asking? Right, so let me just clear this. So I'm not going to go into specific detail about all of this, because this is something which was specific for Red Pill members, essentially. What I spoke about yesterday in terms of all of this, right, and how to essentially, you know, manage all of this, okay, and how we took longs out of this and everything like that. So that's not the purpose for today, but the reason for this trade entry is very, very simple. So first and foremost, I'm expecting search and destroy type conditions, right? So again, this is context, right? Context that we have a high impact news event coming out at 9:45, so I'm not expecting range expansion, okay? Especially after we've had a fairly hefty sell-off since yesterday, okay? And we have come down to an area where price is likely to consolidate, okay? Which is back inside these order blocks, and we also have these order blocks over here, right? So bear with me. What I do when I'm playing search and destroy type market profiles is that I'm literally playing liquidity tag, okay? So again, this is an area of accumulation, and we have two relative equal lows that are just below here, okay? So if we draw these across the chart, this is our sell side, okay? So what I'm looking for is a turtle suit on these lows, back inside this accumulation after a big sell-off from yesterday's high, expecting search and destroy, looking at this low to remain in search and destroy, because I'm not expecting range expansion. Guys, a lot of this is experience, okay? This isn't me saying this is a clear-cut model where you can go, oh, you can adopt this every week. It's not. This is an experience trade, right? It's an experience-led trade. But I'm looking at these relative equal lows inside of accumulation, expecting this low to hold because of the 9:45 news, okay? So what have we got here? Well, we have this hourly candle that's wicked out the liquidity on both sides. So I'm expecting price to pull back up into this range, right? Now we have this displacement leg which hasn't been rebalanced. So my partials at 06.25 is inside of this fair value gap, right? Which coincides with this H1 order block, right? Now I've still got runners. I'm in down here, so I'm in on the turtle suit, right? I'm in on the purge of these lows, right? If you actually look at this, there's a 15-minute order block, but I'm in on after purging these lows. Okay. So now, with it being search and destroy, I'm okay with price doing this. Just basically playing liquidity tag. What was I saying previously? Is this an area where you could go short or you stop off the highs? Yes. Just playing liquidity tag. That is search and destroy profile. Buy side. Tagged, sell side, tagged. What's it going to go for? Well, it's going to go up into this range. What is this? This is the interim term high. Again, price could, if it wants, reject this level again and take me out of my position. In fact, I'm going to take one off here.
Ah, posh!
So I've got one run. I'm just going to work on an exit. So price could melt here and come and take me out now because this is an interim term high, right? Interim term highs, if price is bearish, will respect these, especially with this being a bearish order block, this being a SIBI fill, this becomes an interim term high, okay? So price should not go above this if price is looking to reach a lower figure, right? But for me, the jury's out. So all I was doing was trading an inefficiency and imbalance in price. So this inefficiency in price in this example up inside this displacement leg after purging the lows from yesterday's AM session, right? Back inside accumulation, expecting search and destroy, right? That's my trade context and my trade reasoning for this trade, right? Now I'm just holding runners to see if runners wants to come and punch this high and return back into this range which hasn't been rebalanced yet, right? So if you're looking at this range from low to high, it's got up to 50%, but it hasn't got up into OTE, right? OTE would take us back into this fair value gap, this old SIBI on the hourly, okay? Which coincides with this daily volume imbalance, right? So say if price wants to get back into there. So if price wants to go, 15 would probably be a level I'd look at, right? We have, let me just work on this. So you have balanced price range here, but you can see how price is wicked up into this 15-minute volume imbalance. Essentially the low of this breaker block. So we have the high, the low, the higher high, and the breakdown. This is going to be where I'm going to look to take off my last position, which is 14.25, right? So if price gets up there, great trade. If it wants to come and take me out, I do not care, right? This is where I'm like not too, I don't really mind what price does. I don't care. It's purely a runner because it's not 100% clear in terms of the direction. It's not, right? It's not. Trading liquidity is one thing, right? Trading liquidity is one thing. To take your 5 handles, we've explained it here. This is very, very easy. You can do this literally in any fluctuation. You know, taking 5 handles is not difficult. But trying to trade range and take directional bias, it leaves the door open to ambiguity, specifically if, you know, the draw isn't absolutely clear. And it's not absolutely clear at the moment, right? It's just not. So if it runs that target, great. If it doesn't, so be it. I don't care. All right. But I'm in down here. I've taken the lion's portion off. I've left lambs for slaughter, right? Do I have a lamb to slaughter? Yes. Did I take my lion's share off? Yes. Do I care if this takes me out? No. I live stream every day, every single day inside of Red Pill, from the open to the close. I take breaks around lunch, but I'm pretty much on stream all day. Now and again I'm on YouTube. Not always on YouTube. Now and again I'll drop onto YouTube to see what the wider world is doing, but I'm not always on YouTube. And obviously I reserve a lot of the, highbrow stuff for Red Pill members. You're welcome. Any other questions? Otherwise, I'm gonna go and have a little break before news. Newsy. Good stuff. All right, guys. Well, I'm gonna stick my disclaimer up, and I'll probably just end this stream here. And I'll catch you soon, guys. All right. Interim term highs. So Joshua, just watch my video on YouTube, brother. It explains it in more detail there, bro. All right. So I'll catch you soon, guys. Take it easy. Nice little session with you all. Hope you have good days. If not, I'll see you inside. If not, don't worry about it. If you're not earning, you're learning. And if you're inside Red Pill, I'll catch you in a bit. All right. So I'll catch you in a bit. Yeah, peace.